Let's have a look at the currency market, see how the Aussie dollar is trading early this morning there. 91.92 US, so moving higher from where it closed over the weekend, 91.7. I'll get some more on this for you in just a moment, when we are joined by Chris Weston from IG in Melbourne. Chris, good to see you there. Yeah, now just before we get to the Aussie, I just wanted to ask you about the finish on US markets. I mean, it was a pretty flat finish given the disappointment over Microsoft and Google there. What do you think? I mean, another record high for the S&P 500 regardless. Earnings, big week this week from the S&P 500 companies. What do you think? Is the market just going to push higher there, the equity market in the US?
Well, I think it's all about earnings this week, Bridie. I mean, we've got a week where there really isn't any. In fact, there's no Fed speakers coming out at all, so we don't have that tapering debate so much front and centre as it was last week, and of course the weeks prior to that. So I think it's down to earnings. I think the biggest release this week is going to be the durable goods and then obviously University of Michigan numbers on Friday. So earnings very much in the spotlight. We've just had 21% of companies coming out. Something like 73% have beaten on the bottom line. We've seen decent EPS growth, but of course a lot of that is down to buybacks that we've been seeing over the PCP. And we've seen 52% of companies beaten on the revenue, which is fine. That's probably below average. However, I think what we've got to remember as well is that we've also seen 4% revenue growth. So we're actually seeing top line growth for the first time in quite some time. Very positive situation. The big release this week for me is going to be Caterpillar. Obviously, it's got a huge leverage to the emerging markets in China. If you actually pull up a chart of BHP, overlap that against Caterpillar, they've got a very, very strong correlation as well. So I think if Caterpillar actually gets a bit of a wriggle on, we could see BHP taking some solace from that as well. So that's the big one tonight. We've got Halliburton, McDonald's and Gannett on the media side of things as well. So earnings have been the big situation. And I think what's also really interesting is just the huge flows we saw last week into US mutual funds. $17.5 billion US going into US mutual funds that invest in equities, into equity ETFs. That's the highest level since June 2008. And whilst we also saw this, we saw big outflows in US Treasuries, high yield debt, investment grade debt. So if you want to see that rotation trade, this is probably the front and centre trade that happened last week. Big exodus, reasonable exodus out of the bond market, and the biggest inflows into US equities in a number of years as well. Really positive stuff.
Just in terms of our market, how is the ASX 200 likely to open, do you think, given all the news events we had over the weekend?
Well, just going back to the US thing, I think the one thing which we don't have is we don't get to see those fund flows like they do in the US. In the US, they've got AMG and Lipper who come out with these different numbers that we can look at every week and get a really clear sense of the rotation. But I think today we are looking for another positive open. We're seeing the market open just above 5,000. The ceiling on the market for the last, I suppose, couple of weeks has been around 5,012. And if we can get a positive open because of Japanese markets and also what's happening in China, then we could probably try and push through that. A daily close above 5,012 would certainly be good for momentum traders. We'd see more short covering coming through from an index level, probably in the SPY futures. I think the Japanese election, we've seen dollar yen coming off a little bit this morning. The election was fully priced into the market. I mean, dollar yen since June's up about 7% or so. It was always expected that the LDP party and the Nukamoto party were going to get the amount of seats they did. LDP under obviously Shinzo Abe getting 65 seats. That was always speculated, and the polls have been pretty much bang on the money. So we've seen a bit of a buy the rumour, sell the fact, although longer term this is very positive for Abenomics. The Chinese situation over the weekend, or certainly after the close of the Chinese market on Friday, we did see a bit of a spike in the Aussie dollar, was that the banks were going to, or the People's Bank of China are going to scrap the floor which banks can go and lend to. They've got a benchmark at the moment. They have the capabilities of lending 70% of the benchmark rate, which is 6%. So that's been scrapped, which is a positive. It shows that China are obviously liberalising their rates, but it's not going to have any impact for me longer term in the market because banks could already lend lower than the 6%, but only about 11% of loans have actually been under that level. So it's not really going to have a major impact. So people have been talking about it. I just don't think it's going to have a sizable long-term impact. But overall, the news is a net positive, and I think we'll probably open have quite a strong open. Of course, Nikkei and the CSI and Shanghai Composite are going to be the drivers intraday of our market. And the other big situation is what's happening in the US. Where a number of the investment banks, certainly the Fed, are looking at the investment banks, so the commodities trading side of things, and potentially reviewing whether banks who take deposits can actually engage in commodity activity as well, which could weigh on the markets tonight, although US futures are up a little bit on open this morning.
All right, something obviously to watch there. In terms of the Aussie US, then that cross, how are you playing it this week given the data flow?
Yeah, look, everything technically and fundamentally says this trade's going sideways at the moment. You want to be playing the range. So we're looking for an upside sort of 103.50. I'll be looking to sell around there, down to about, I'll probably, just look for that range at the moment. I think, we've seen the May downtrend being broken. And I think you want to be playing the range. Sorry, 91 to 94 is the range that I'm looking for at the moment. So I think anything up to 94 you look to sell, down to around 91 you look to buy at the moment. The positioning is very, very stretched. 70,000 net short contracts on the Aussie. Never been to those kind of levels, although you've been saying that for a couple of weeks now. And I think it really just drives. Everything's down to Australian data this week. The CPI number on Wednesday is the make or break situation. The market's pricing in a 63% probability that we're going to see an August cut. So if we get a number, say 2.5% and above on the trimmed mean number, you could probably see a situation where the rate cuts get priced out and you see a bit of a spike up in the Aussie dollar. Get a number below, I think the consensus at the moment is around 2.1%. If we get a number 2% or below, yeah, you're clearly going to see an August rate cut being fully priced into these markets, and it probably brings you down to the low end of that range. So I'm just playing the range 91 to 94 at the moment.
All right, Chris, as always, thank you so much.
Thanks, Bobby.
Chris Weston there from